I assume this Walmart news not going to help. The IPO window just going to stay even more tightly shut, right?
I think that's absolutely right. This is kind of just another month of more kind of hits to the IPO market and its prospects. Walmart maybe think like a different company compared to technology companies where it's selling milk and staples, but that's still going to feed through to other companies as well. I think the real eye is going to be on some of these tech stocks, and as they report later through the week, I'm sure a lot of bankers and companies that were hoping to tap the markets are waiting with bated breath.
So is the IPO window shut across the board for all kinds of companies? Or, for example, with this Walmart news, does it more affect companies that are focused on e-commerce? Or, is this something happening more broadly?
Yeah, I think that's totally right. We define so many different companies as being in technology. So I think any company that's related to consumer spending, maybe it's coming up with solutions for aviation or groceries, are going to be severely impacted. But on the other hand, you've got a lot of companies that are actually selling direct to enterprises, right? You've got traditional software companies. They'll feel less impact from the Walmart news, but they're going to keep a really close eye on some of the bigger tech names as they report. However, it's kind of a perfect storm where we've got still continuing uncertainty about inflation. You've got really tough earnings updates and guidance given from companies like Walmart and even Snap last week. And you've also got a historically really slow part of the year for IPOs as well. So that kind of all comes together, and you're probably not seeing anything go out the door until Q4.
KKR told the information that IPOs are a year away. How far away do you think they are?
I think that's about right. I think you've got companies that are preparing everything if the economy does turn around a little bit more quickly. You've got finance teams at each of these pre-IPO companies. We speak to them a lot, and they're gearing up to be ready when that window kind of comes available. Maybe there's an opportunity in Q4 for the strongest, most marquee names, the companies that everyone's super familiar with. But other than that, I tend to agree it's probably not going to be until 2023.
The closed IPO window is creating some tension between employees and employers. You've got all of these employees working at these startups who thought maybe they were going to get an exit and soon. That's not happening. What are you seeing happening below the surface?
Sure. So at EquityZen, we have a really good lens into kind of the feelings and the sentiment of employees that hold these shares. And a lot of the conversations that those employees had with their employer last year was that everything's great. We're raising a lot of money. We're going to be able to go public soon and get liquidity. And that's certainly not the case. And it's actually being kind of exacerbated by the fact that there's been some recent news coming out from some companies where insiders, mainly executives or founders, actually took a lot of chips off the table in 2021 in better times, but didn't make that available to employees. And to me, that's kind of serving as a bit of fuel on the fire for what I imagine will be probably an uprising is a bit extreme, but I think a big movement from employees to ask their employers for more opportunities for liquidity, since it's so important, in this current economy.
Right. There's the company DataRobot. The CEO just reportedly resigned there in part due to share sales that executives were allowed to do, that longtime lower-level employees were not allowed to do. What are the ripple effects do you see happening here? I mean, do you think employees will start walking out looking for other jobs, or do they not? Are there not a lot of choices right now because the market is so tight and you've got tech hiring freezes and layoffs happening across the board?
Well, if you ask any recruiter at a venture-backed company if it's become easier to hire engineers, it has not been. So I think that the job market for those types of folks is still really, really hot. And so I think there will be some voting with their feet. The DataRobot situation in particular was really bad in the sense that these were executives that only joined the company 2 years ago or so. At EquityZen, we see founders that take chips off the table after they've put their blood, sweat, and tears and built the business for the last 8, 9, 10, 11 years. And I think that's actually pretty well received by employees, and it seems very justified. But when you see some senior execs that haven't been around very long, that's what really frustrates people. So I think founders and CEOs really have a choice. You can be reactive and hope that employees stick around, or you can be proactive and start talking about liquidity, because it is a valve that companies can use to retain their best employees without having to dig into more money out of their balance sheets that are obviously getting hurt right now in the current economy. So I think it's kind of a win-win for everyone.